Hello there, my name is Alabu Ghanem. I'm the principal at Cribia Capital, and I am going through this video here in order to introduce the project that we have and basically present the location of the property, present the design, present the financial modeling behind it, and um, use this video as basically a consolidation of all the information that is regarding the project. Starting with the the overall location of it, this is in Charlotte, North Carolina. This is Wilkinson Boulevard or US 74, and this is Freedom Drive right here. And the project is kind of on the midpoint between Freedom Drive and Wilkinson Boulevard. It's about 6 minutes away from downtown Charlotte. So if I zoom in right here, this is our property, and I'm going to take a screenshot of this and highlight it just to make sure we are clear. This is the property itself. It's already been subdivided into two units, and the idea is that we build and sell two duplex units on this, with the duplexes having a shared wall in the middle. That's basically what we are attempting to do. With that said, I will jump into the design of the units. So um, each unit is about 1,550 square feet with a one-car garage and living and kitchen on the first floor and then bedrooms on the second floor. So if I flip through these floor plans for it, this is the architectural site plan showing driveway and walkway up to the front door and how the units would sit on the piece of property. And the first floor plan is right here showing the one car garage and then a small front porch with the door coming in, stair taking you up to the second level with a small bathroom underneath it, and guest bathroom, and the kitchen over on this side with the living and dining area behind it. And both units are an exact copy of each other. When we go up to the second floor, you land in this kind of common hallway space with access to a washer and dryer, common washer and dryer. On the back of the space is a primary bedroom with its walk-in closet and a master bath. And on the front is two smaller bedrooms with a shared bath right here. And so the layout of the design is fairly simple. And I'm going to skip all of the architectural detailing on this and jump straight to the 3Ds. These are 3D axonometric views of the property. It's going to have a flat roof, probably a TPO membrane roof on top of it, um, with um, basically designs on the front elevation and the rest of it fairly simple. This is a view from the other side and views from the back. And if this is a good point in the conversation to share the website where all this information is also going to be present. If you go to cribia.com, cribia.com, you can see a rendering of the full design and how it's going to look like in real life. And so with that said, I would jump into the financial modeling piece of it. So the going through the project, we set up three financial scenarios. One is a very conservative scenario, another one is close to an appraised scenario, and the third one is a best case scenario. And so before I dive into these, we are tracking a timeline of this to be sold in the summer of 2025, hopefully built by before then and sold by June, July, and hopefully before August, but August would still be an okay sale time for these properties. So let me dive into the financial modeling behind this. Under the conservative scenario, we have the land purchase price at 170,000. Property insurances, utilities, and maintenance at 1,000. Property taxes 2,000. Procurement syndication fees at 5,000. Administrative expenses at 2,000. Accounting legal fees at 2,000. Acquisition broker fees none. land subdivision entitlement, which has already taken place at 5,000, appraisals subject to appraisals at 1,000, design permitting costs at 20,000, which that is also has been taken care of, demolition costs none, and construction costs for the actual build itself, we're estimating around between 500 and 600,000. And so right here we have 500,000 and a $50,000 in reserves. Um, and so overall, these are project costs, which would result into a $758,000 total project cost. In the conservative scenario, we are assuming that each unit, if you see here, would sell at 450,000, which makes the sale price for both units at 900,000. Closing costs and commissions, we have a blanket just 6% reserved for this, um, which puts you at 54,000. Total project proceeds is the 900 minus the 54, and then total project costs is the 758 from this number up above, which leaves you at a net profit of 88,000. Project ROI is 88,000 divided by 900,000 is 11.61%. And then there's a management fee for putting the deal together. The profit split for the management company is equal to the project ROI, so it's on a sliding scale depending on the profitability of the project. In this case, it'll be 11.61% of that 88,000, which equates to 10,216. So investors' project split is the 88,000 minus the management fee at 77,000. Investor ROI on the invested money is 10%, 10.26%. In this conservative scenario, we are estimating that we're holding the project for 14 months. That's build, construction, and sale. And so that is a little bit too long for what we see these projects being built, time taking for these projects to be built for and sold. But we wanted to keep this as a um, conservative estimate under this investor's annualized ROI over 14 months. It puts you at 8.8%. Now, the profit and loss scenario stays the same in the appraised scenario, at least for the cost portion of it right here. The difference starts to take place at the sale price, where we're estimating uh, a sale of $500,000 for each unit. And this is a good place to share the subject to appraisal that we have completed as of 8/16/2024. And based on this date, the appraised value of the construct or of the sale subject to them being built to the plans is 533,000. So even the appraised scenario is a little bit more conservative on the sale price than the actual appraisal came out to be. But that puts us at $1 million for the sale of the two units. Uh, Again, 6% for closing costs and commissions. Total project proceeds at 940,000. Total project costs is 758 from this number up here, leaving you with a net profit of 182, and the project ROI being 24% in this case. Caribbean Capital management fee equals 24% from that net project profit number, which is 43,000, leaving the investor profit at 138,300 at around 18%. In this scenario, we estimated a 12-month construction and sale timeline, and so this is more reasonable and what we think we can achieve, but we might be able to expedite that timeline a little bit more, which you'll see in the best case scenario here. Last scenario in this case right here, we did make an increase in the construction cost. We bumped it up from 500,000 to 600,000, making the overall cost of the project 858. So that's if we're going to add some extra bells and whistles in the construction. Leaves you at 858,000 total cost of the project. In this case, we are estimating a sale of $600,000 per unit, $1.2 million total, which we believe that if that sale takes place in summer of 2025, that the interest rates would have dropped and we are able to achieve a number closer to that 600,000. Same 6% allowance for closing costs and commission. It leaves you with 1.128 million. Total project costs in this case are 858, leaving a net profit of 270. Uh, Project ROI in this case is around 31%, and then profit split of 31% from the net profit of 84,000, leaving the investor profit at 185,000 on the project, equivalent to about 21%, 21.5% on the project. In this case, we're estimating a construction and sale timeline of around 10 months. And myself, I'm an architect, and we do these designs and we see these projects go through on um, a lot of for a lot of developers that we do work for, and usually 6 to 8 month construction timeline for something this simple is completely reasonable, and maybe a 2 month sale timeline is reasonable as well. So even with the best case scenario, I believe personally that a 10-month holding period is completely reasonable when it comes to building and selling these units. And so these financial models here are all projections for the future. And so, of course, for a project like this, the final deal or the final numbers will reflect actuals, and all of these percentages will have to adjust based on what the actual spent amounts are. Thank you for taking a look at this with me. And if you have any questions, please go to cribia.com and contact us through that page on the website. And I'll be happy to either have a more in-depth conversation with you about this project or answer any questions that you might have. Thank you.